Thank you for joining us for a snapshot of the Base Resources story, delivering returns. Base Resources is an Australian headquartered company listed on the ASX, but also on AIM, with our primary focus to now having been the Kwale Operations in Kenya. And more recently, we acquired the world-class Toliara Project as the next sort of phase, if you like, in the development of the company. The foundation of the company is unquestionably the Kwale Operation. We acquired the project in early 2010 and then proceeded to design and build it, operationalising the project towards the end of 2013. It represents about 70% of the Kenyan mining industry, so it was a very significant development for the country, and we were something of a trailblazer in terms of large-scale mining in the country. It's been an incredibly stable, consistent, predictable operation right through its life to date. The biggest challenge with Kwale was its relatively short mine life at 11 years, based on the resource we started with, and I'll come back to talk more about that in a minute. It's a relatively simple operation. As you can see from the imagery there, we use hydro mining. It's a very efficient way of mining a deposit like this, which has the advantage, if you like, in this circumstance of relatively high slime in the ore, at around 25 to 30%. That enables the use of that hydro mining. It also requires the development of a very large tailing storage facility, like you can see there. That's quite a large mass movement exercise that adds to the costs of operations at Kwale. But that'll be relevant when I talk a bit about how we're thinking about the Toliara Project and the differences between the two in a couple of minutes' time. The processing at Kwale is purely conventional mineral sand separation. We've learnt a lot, notwithstanding the success of Kwale. We've learnt a lot about the development, the design of the plant, the operational aspects of it. That we're baking into how we're approaching the Toliara Project. So it's been a great learning experience, lot of opportunity, I should say. While it has been successful, there have been a number of things that we would do differently the second time around. So good opportunity. The two projects are quite similar in a flow sheet sense, where, with the exception of the low slime at Toliara, there's only about 4% slime. So hydro mining won't be an option. We'll be back to the dozer trap mining that we used initially at Kwale. But what that means is we don't have that very large tailing storage facility that we need to maintain, which simplifies our lives significantly. The other key point of difference, firstly, the similarity is the logistics chain to port. They're roughly the same distance. The difference is the amount of infrastructure we need to build at Toliara, where we have to build the main 50-kilometre road from the mine site down to the port facility. And we also have to build a larger port facility with a jetty, 5 times the length of what we have here at Kwale, because of Kwale being, or the Kwale operation being inside the port of Mombasa, with the main shipping channel readily available to us. So that's the key point of difference. Higher capex at Toliara because of that infrastructure, but lower operating costs. Now, so as I said a minute ago, Kwale had a relatively short mine life based on the central and south dunes. You can see there's a gap where the central dune used to be. We're in the yellow area now, the south dune, and mining our way through that. That yellow area gives us ore through until late 2024. We've completed a pre-feasibility study for the entirety of that red area, the North Dune. We've concluded that that's not going to be economically viable due to grades in its totality. But what we're looking at now is a subset of that, the higher grade components of it. And we're looking to get a study out released in around July, August of this year. Looking beyond that, we see opportunities to continue our stay in Kenya into the future. The area of primary interest is on the left, or short-term interest being Karanze. Quite a large area, got some very interesting shows for rutile. we're quite excited about that. Those license applications are working their way through the approval process, and we're hoping to have those granted in the not too distant future so we can get exploration underway. We also have a series of license applications further north, up around Lamu. They are also working their way through the application process or the granting process in Kenya, and we expect to have those granted in the near future. It's been a bit of a slow process with the cadastre in Kenya having been closed for the best part of 18 months, while some, I guess, governance issues were cleaned up. So with that as a backdrop, with our cash engine of Kwale, we've been seeing a really strong pricing environment right through the COVID period. We were fully expecting, as did everyone, that calendar 2020 could well have seen 30% drop-offs in pigment consumption, which is the majority, is where the majority of our products end up. Interestingly, when the results came out at the end of the year, the sales results, we saw that there'd been a 4% pickup in pigment consumption over the course of 2020 over 2019. And subsequent to that, we've just seen continued really strong growth in pigment consumption, pigment price, and our feedstocks accordingly. So ilmenite is continuing to march up, shipment on shipment. Rutile is marching up as well alongside it. It flattened out a little bit in the last quarter, largely because we had a shipment during that period where the price was set back late last year. But the trend in the marketplace is definitely on the way up. And a similar story with zircon, where we're seeing prices in excess of $1,500 a tonne now. The longer term structural sort of picture for our feedstocks is extremely positive. There is a quite clear short supply emerging, a quite clear need for new supply emerging, and it's a pretty exciting sector to be in, to be honest, at the moment. All of that has given us a really sound financial platform from which to build our business. Where at the end of March we had $72 million US in cash. We have no debt. We paid out $26.6 million US in total in dividends in March, and another in excess of $30 million back in October last year. We're sitting at a market cap of around $350 million at the moment, Australian. Very supportive register, albeit a very tight institutional register with relatively few phone calls to make to understand what our shareholders think. One of the big steps for us over the last 12 months has been the implementation of our capital management policy or approach. What we seek to do is deliver returns to shareholders through both long-term growth in the company's share price, but also through appropriate cash distributions. The delay in the start of Toliara, or the development of Toliara, has given us the opportunity to, I guess, repatriate surplus cash to shareholders. Where we don't see an immediate need for it to be applied in growth and development requirements, or where we think we need to maintain greater balance sheet strength, our plan is to return that to shareholders. So that's seen a total of 6.5 cents per share paid over the last 12 months. And we think that strikes a really good balance between delivering returns to shareholders and also maintaining that balance sheet strength, but still allowing for the sensible progression of Toliara projects and other opportunities. Which brings us on to Toliara. We spent a lot of time looking at project opportunities before we settled on Toliara. We completed the acquisition of this project in early 2018. It's an absolutely stellar project opportunity. We're sitting on a 1.3 billion tonne resource at the moment, 86 million tonnes of which formed the basis of the project DFS we got out in December 2019. That was enough for a 33-year mine life, with average production levels at around 800,000 tonnes for ilmenite and 60,000 tonnes for zircon and rutile combined. So even just with that resource, quite clearly significant expansion potential. But also the results of some drilling programs we conducted over the course of 2018 and 2019 have really shown us that this deposit extends quite strongly to the west. We've known there were zones below the zone that forms the basis of the current resource. We haven't incorporated that drilling into an updated resource. That will happen in due course. But you can see from some of those drilling results that the grades and the depths of this material from surface is, absolutely world class, and we can see the potential here for a massive, century-long operation. We've been pedaling pretty hard over the last 12 to 18 months since that DFS came out, notwithstanding the suspension of activity while we discuss fiscal terms with government. We've been progressing things like lenders engagement. We've had the lenders independent expert complete their technical review and give the project the tick off. We've been progressing a whole lot of long lead contracts so that we're ready to go as soon as we do get that runway to a final investment decision. Some sensible feed activities have been completed, and we've done quite a lot of workforce development, both in country but also with a number of apprentices and completing their studies at our Kwale operations in Kenya during the midst of COVID. Which brings us to the timeline. The big catalyst for us is securing fiscal terms with government. We're progressing discussions with government. We're in an environment where Madagascar has had 2 large-scale mines prior to us. They haven't necessarily delivered what the government would have expected or hoped for. They're very focused on trying to get this right. That's the sort of the backdrop to our discussions. We're making progress. There are some revisions to the mining code that are running along in parallel with our discussions, and those seem to be coming to a head. The way we see the timetable is that once we secure those fiscal terms, we've got about 11 months of work required to get to a final investment decision. And once we have taken that final investment decision, we will have about 26 months to first shipment. The biggest pieces of work in that 11-month period a whole lot of early works and feed work, obviously, some documentary work around the fiscal stability regime, or the LGIM in Madagascar as it's called. The other 2 really big ones are the funding around that to complete the picture. We're looking at a large debt facility. We're making good progress on that. We've probably taken it as far as we can, but we're also progressing a couple of joint venture opportunities with some really good interest being expressed in participation by downstream customers. So bit of work to complete on that once we've secured those fiscal terms. So it's a pretty exciting outlook for base. The markets we're in are extremely supportive, resulting in the generation of good cash flow from Kwale. We've got extensional opportunities at Kwale that we're busily unwrapping, and we're sitting on what we think is the best undeveloped mineral sand project in the world. We're making good progress with our host government in Madagascar, and because of our commitment to this project and the quality of it, it's one that's well worth being patient for. So, we're pretty happy with where we find ourselves at the moment. So thanks for joining.